Welcome everyone to our weekly webinar. I know that many of you joined to learn about the latest trends and tips on how to deal with the uncertain times, as well as to learn about innovation in the real estate industry. For the new folks here, we are doing these weekly webinars to better connect with the real estate professionals, provide help inviting the industry leaders, and in the end, we always show the latest updates on Propy, on our product that is built to transform the real estate transaction. Today, we will be no different. We're going to dive deeper into the Silicon Valley market situation. I have today Nick Solis, who is a founder of his own brokerage in the Bay Area, and also held leadership positions at the National Association of Realtors and California Association of Realtors. We're going to discuss what's the price and activity impact of COVID-19 on the market. Is it hard to sell properties in San Francisco and Silicon Valley? Is it a real trend or just a buzz that tech executives are escaping from the Silicon Valley market, or they are usually interested to invest now and buy the deep, so to say. So don't hesitate to drop questions during the webinar. At the end, we will have an open discussion on your experience at your local market. So get prepared to get your camera and audio on in about 30 minutes. And now let's kick off. Nick, thank you so much for joining us today. Could you please introduce yourself as well as explain a little bit what motivated you to join the NAR and CAR leadership positions?
Good afternoon, everybody. I'm Nick Solis, and thank you for having me on, Natalia. I'm a really big fan of trying to share information, especially during these very, very trying times for us, but also a very big fan of what you and the team are doing at Propy. So, you know, for myself, I've been in the business now going on 17 years, so still fairly new considering. I started straight out of college. Got into brokerage management very early on. So I had a different perspective on how I wanted to build a company and kind of what that relationship between the brokerage and the agents were, but then also that relationship between the agents and the consumer is, right? And so after about 9 years or so, just kind of chugging along, trying to build up my business and coming out of the last downturn, you know, I'm a big seeker of information. And so there's a ton of classes for agents to figure out how to grow their business. But, you know, at the time, there weren't a whole lot of classes for brokerage owners, brokerage leaders to try to find a way to grow their business. So saw something that CAR was putting on, which is the California Association of Realtors. And it was down in Long Beach. So only, you know, maybe about a 5-hour drive for me. So, you know, I'm a big jumped in the car with my partner and went down to the first ever broker conference that was led by the famous Sarah Sudachan. And, you know, got a chance to participate because they started asking questions. And one of the questions was, how many people in the room are under the age of 40? And so I put up my hand, you know, mine and my partner looked around the room and said, uh-oh, it's only us two and one other young lady. And so they asked us some questions because obviously we brought a little bit different perspective to the group. And afterwards, you know, got a chance to meet Sarah and a few other people, and they said, you know, how long have you been involved here at CAR? And I go, you know, involved how so? I don't really understand the context of your question. And they said, well, how about your local association? And still just kind of that deer in the headlights blank look. And she goes, well, why are you here? And I said, well, I'm here to learn. And you know, I'd say I've been in the business now for, you know, going on 9+ years, and you know, I'm not involved per se with the association. I just pay my dues. She goes, well, why don't you get involved? I go, well, frankly, I don't know how. And I really don't like a lot of things the association does. They make a lot of rules and they don't really seem to make sense to me. And me being young, I don't really feel like I fit in with a whole lot of folks here. And she said, you know, let me introduce you to a couple people. And she introduced me to the Young Professionals Network. And that really changed everything for me. Through that, got to meet a lot of incredible people. And what I learned was that, you know, it's not NAR that makes the rules for us. You know, there's no CAR that makes the rules for us. It's a bunch of realtor volunteers that make the rules for each other. And so, as opposed to just trying to sit on the outside and throw rocks at a glass house, I figured let me figure out a way to get in the house, try to, make my voice and my diverse opinion heard, and see if I could help kind of move the needle in that way. And so was able to do that. I'm a pretty outspoken person when I have something to say. And so got the opportunity to work at a lot of different levels now and a lot of different forms of leadership throughout both my local or throughout my local, state, and national association. And so it's afforded me the ability to kind of create the future of real estate versus having it created for me, if you will.
Thank you. Thank you, Nick. And thank you for taking these positions and affecting what we all do here today in our industry. So Nick today prepared a presentation about the situation on the market. And so Nick, please share your screen. So our next question will be, are prices going down in Silicon Valley in real estate? The San Jose metro area's housing market is one of the most resilient in the nation, even amid the effects of a coronavirus-induced downturn. But other markets aren't poised to fare as well. San Francisco is way more affected, I believe. Silicon Valley's expensive residential real estate sales may have seen a slump in March and April during the region's restrictive shelter-in-place orders. But industry insiders say it's still a seller's market. So Nick, could you please confirm or oppose to these opinions? And let's see what statistics we have today about our local market.
Sure. So I was able to borrow a couple of stats from a presentation that was just done at the very end of, at the beginning of June. The stats go through the end of May. The presentation was done by one of our economists at CAR, Jordan Levine. And so, kind of the first slide that I felt that really compelled me to discuss with the group today is, is there a bottom, right? And so when we start to look at that, when you look at the beginning of the graph, kind of week 10 of the month, all the way now to, week 22 of week 10 of the year, all the way to week 22 of the year, you see that, back in late January or so, early February, things were moving. And then next thing you know, it just kind of stalled out a little bit. Typically, we would see an increase as we get into what's called, the spring buying season. And so, although things dipped a little bit, we really didn't see that bottom. I had a client that I was working with that, she swore up and down we were going to see a 20% drop like we did 2008, 2009. I told her, I said, the stats really just don't support that, with the lack of inventory with homes. I would just be shocked to see that. And now, several months later, we've seen it play out to not be the case, right? And so I thought that was very telling that, we have seen the bottom and we started to see an uptick. Now that bottom really wasn't too low. So I find that interesting. The other slide that I picked out of the presentation was, what's going on with pending sales, right? So this is based off a daily basis. And so, the Bay Area really is made out of 7 Bay Area counties. All of them are diverse in their own ways. And with that said, at the beginning of the year, really, it's not an extremely busy time of the year. So, at 121 pending sales a day, we're just kind of chugging along. It was up a little bit from the year over year. And then as we got into the shelter in place, which the Bay Area here in California was, essentially the first, area set of counties or region, if you will, to, get that shelter in place, we saw a significant drop in the homes that were going pending. But as you see us start to come out of that, week 16, 17, 18, it was really a swinging of the pendulum because the shelter in place at first, they didn't allow us to show real estate whatsoever in person. Everything had to be done virtually. And then, the next step for them a couple of weeks later was, okay, well, you could show properties that are vacant, but if it's tenant or owner occupied, you can't show it whatsoever. It still needs to be done all virtually. So, we're still seeing a little bit of that demand open up, but then, towards, week 20 or so, we really see it explode because that's when the counties, came out almost uniformly and said, okay, look, we understand that some activity needs to, start again. And so with the proper protocols in place, we're going to allow you to show, vacant properties, but also properties that have, tenants and our own, and have people that are currently living in there shown. And so that's when we've seen things really start to take off. And so, you look at 153 pendings a day and you go, okay, wow, that's really picking up. The same time, we have to look at this as a seasonally adjusted number. Typically in the spring buying season, we would see this number be a little bit higher. Now, it's not devastatingly low, but it's not where we would expect. But with that said,
higher, sorry to interrupt you, Nick. Higher, what do you mean? Like 200 sales a day pending?
I think somewhere around 180 to 190, I think when you look at it adjusted over maybe a 10-year span is what we would expect. But a lot of people thought that the market would just tank altogether, right? And so we saw the dip, but you could definitely see us coming out of it. So a little bit lower than we would typically be on a adjusted basis, but definitely not to where, the naysayers were predicting us to be. So, one of the ways to figure out if we've gotten back to normal is just to kind of see what's coming on the market now. You see that big uptick, around week 19 or so. However, to me, what that says is that a lot of people didn't want to put their homes on the market. They saw the opportunity too. And then, there was a little bit of that pent up demand. So we've seen a little bit of a drop in the last couple of weeks. Still people are somewhat hesitant to go on the market. We're seeing the people that had to, that were pent up, do that. But at the same time, now what we're seeing is we're seeing people start to back off a little bit. So, the listing inventory is really not where we would expect it to be right now, but the buyer activity is just off the charts. And then the last thing that I'd like to show is just, the closed prices. So when you look at the different regions, right, Bay Area, Central Coast, Central Valley, Far North, and Southern California, let's look at Southern California to begin with. Really what there's a $3, difference between, this entire span per square foot. But in the Bay Area, you see, almost $28, right? And so, we've stayed pretty consistent, but we're seeing that uptick because, let's face it, we're in the tech capital of the world, right? And so with technology, people are able to work remotely. Technology and the use of it is going to be even more instrumental to almost any business you can imagine. And so people feel really secure about their jobs, and they feel like, they have the ability to be able to, buy, even though some of the other regions are a little bit more stagnant. So to me, that's why you're seeing the big increase in price, even though we are starting to see an exodus of people leaving the Bay Area, which is something that you and I will talk about a little bit later, Natalia. So with that, that's my slides. I just wanted to share just a few of them, just to add a little bit of context to the rest of the conversation.
Fantastic. Thank you so much, Nick. San Francisco is harder hit because you just said that, yes, the majority of folks working in the Bay Area actually work for tech companies and maybe they're not as much affected. However, this market relies heavily on startups that very often are not profitable. And also, we know that the biggest tech employers in the transportation and hospitality business also have been hit hard, particularly by lockdowns. The companies like Airbnb and Uber, they have major operations here in the Bay Area. They announce layoffs. So we see that the tech industry probably suffered and introduced some level of unemployment in our area as well. For the past decade, San Francisco has outshined Silicon Valley in attracting new technology firms, entrepreneurs. They tend to prefer the city, the lifestyle in San Francisco, attractions to the suburbs are not as high for those folks as San Francisco. But at the same time, at least in my network, I see a number of people moving out from San Francisco to either suburbs in Silicon Valley or even to different locations like Los Angeles and other states. Also, we see that the office demand has been falling, of course, especially the volume of tenants looking for space in San Francisco. I have a number here. It has fallen about 56% in San Francisco, compared with a little bit lower, like twice as low. It is 32% in Silicon Valley in the months of February and March. So we can see that definitely the commercial real estate is suffering a lot, but at the same time, I'm hearing those conversations and debates about making the affordable housing and shifting the purpose of commercial real estate to residential, to allow those engineers to have affordable places to live. So do you think tech executives right now are active in investing in real estate in the Bay Area? And what is your thought about tech executives as customers in real estate?
So there's a couple of very big questions there, right? Are people involved with technology still making the investment in the Bay Area? I would say absolutely. Although the investments look and feel a lot different than they did just 6 months ago, right? The price per square foot in San Francisco, has skyrocketed over the last decade. The lifestyle there is something that's been very, very attractive. Now, during the shelter in place situation, what we've seen is that, people are really starting to crave, extra space. When you're stuck in your home for 3 months, or you can only go outside for, some basic type, walking and things like that, you really start to reevaluate what's home and what's important in your home. And the other thing is, when you need to leave your home or when you like to leave your home and you're in an elevator around other people, touching all these different surfaces, in a lobby full of folks, and then you get out into the street with hundreds of people, it's a much different feeling than buying out in the suburbs. So I was interviewed a couple months ago by a publication called Housing Wire, and they were starting to really see the stats of people migrating out of the big cities, including San Francisco. And I've had several clients really start to make that shift themselves. There was just an article just yesterday that was published by SF Gate that essentially said the same thing. And, saying, look, people are trading that, $4,100 a month rent in San Francisco to be able to move out to the suburbs. And then even to areas like Lake Tahoe, going out to Texas, going out to different parts of California, Colorado. And so people are escaping the city. So, yes, they're still making an investment, but when they are, a lot less of the time they're buying in the city, they're buying out in the suburbs. Not even necessarily in the East Bay, because for them to get into the city, they're going to have to take the BART system, and that's super crowded. So they're getting into areas of Marin and down into the South Bay Peninsula. At the same time, folks, also, there's a lot of jobs that are saying, okay, look, you don't need to be in the office 5 days a week, but we do want you here 1 or 2 days. So those folks are still staying out in the suburbs. They're staying in the Bay Area. But there's a lot of people that are permanently going to be able to work remotely. And those folks are getting way out of the area. They're going, again, we're seeing a lot of people go to Lake Tahoe. We're seeing a lot of people go to, again, Colorado, Texas, places like that. So there's a big migration. Now, when you're working with people that, either create technology or rely on that to be able to make a living, they've got very high standards as to how they want to, work with you and how they want to collaborate with the home buying process. And, sadly, we are so far behind still as an industry in the way that we offer homes to people. As a realtor, as a broker, I've got to join several different MLSs to be able to provide the data that these portals do, like Realtor.com and a few others, right? And so it's super frustrating because it either costs me a ton of money to be able to do that, or I've got to be able to offer a lesser kind of experience, and that's a lose-lose, right? And so there's some things that we have a little bit less control over, but there's a lot of things that we have more control over. So, instead of people wanting to jump in the car to go see homes, they're asking, is there a 3D tour? Is there a video that's a walkthrough? Now, they don't want to see an agent commercial, you stand in front of the home talking about how awesome you are, but they do want to see the inside of the home. They want to be able to take that 3D tour. We adopted that process back in 2014. And, back then it was something that was a little bit of a kind of a premium, if you will. But now it's the absolute must. I went to show homes last weekend, and there was 2 homes, that we went to go show. And right when we got in, the buyer's like, nope, not for me. And they go, why don't people use 3D like you do? And I go, well, That's $1 million question. I don't get it. A lot of agents are just really stuck in the past. Now, with that said, there was also one home that did have the 3D tour. My clients immediately saw that home wasn't for them, and we didn't go see it. So not only was that a more efficient process for them and myself, it decreased our exposure to COVID, and it also decreased the exposure for the sellers and additional buyers, or prospective buyers, in the same way. And so these folks that rely on technology and are so used to it, they really demand a higher level. And so it's creating an opportunity for those companies that have adopted technology at a very high level to really separate themselves, as well as agents. Being able to use something that is so widely adopted, but things like a signature platform, so DocuSign, digital ink here in California.
Yeah.
But yet a lot of agents still don't like to do it. Now those agents are really they're behind right now. That kind of streamlined process when they're sending out these documents and getting them signed. Is it coming in a big bundle to sign easily, or is it piecemeal? When you're in technology, you're always looking at efficiency. That's essentially what technology is supposed to do. And real estate is such an inefficient process for most. And so, the folks who are able to use technology and leverage it in a way to be able to make it more efficient, they're winning a lot of clients right now, which in turn is increasing the market share, not only of their business, but their brokerage's business as well.
Yeah, I like that you touched base, my favorite topic, technology and innovation. I strongly believe that the technological advancement in the industry actually saved the industry right now during the pandemic. It allowed the industry to not halt, to do the transactions that were really needed to be conducted due to different circumstances within a number of families. There was a debate whether it's an essential business or not, but we know that there were a number of cases where really the transaction should have happened entirely online. And here would love to hear from you some of the names of the technology you would advise. Also, besides the virtual tour, besides e-signatures, what else do you think is helpful to close transactions, to conduct business during the pandemic and after that? And I'm asking this question because we just touched base that in the Bay Area, the majority of our customers are working for tech companies. And obviously they have these expectations of the experience of doing anything online to be, if not enjoyable and pleasant, at least bearable. And in real estate, we know that it's about 30 days of close and about 20 people seeing the transaction documents and your personal data. Privacy is another topic that is very acute in the Bay Area. So knowing that the transaction process is not transparent, is all shared by email, is exposed, the data is exposed to even more than 20 people, and the buyers and sellers don't know about that. So the question is really how to help the folks that are listening here on Zoom, the participants that are coming from brokerages and those who are real estate agents, realtors, how to help them to better serve tech executives as customers.
So, there's a word that you used that was already on the tip of my tongue, and that's transparent, right? So, when we're looking at tools and technology to really be able to, make the process more efficient and more pleasurable, transparency is the key. So any technology piece that you look at, the biggest question is, what level of transparency can I add from integrating this into my business, right? And so, when I look at, the stats, almost 100% of buyers essentially are shopping online these days. And yet, when I log into the MLS, the interface is almost essentially the same as when I started, back in 2003, almost exactly the same. So one of the big differences that I've started using is a company called Real Scout. They're in the Bay Area as well. Always tweaking and kind of tuning their product And what I found is that it's got a great user experience. It's aesthetically pleasing to the client. They like the way it looks and it feels. It's intuitive, it makes sense, it's easy for them, but it's super deep. It provides them a lot of information. It allows them to filter out, what they're really looking for. So it's not just every 3-bedroom, 2-bath, a minimum 1,500 square feet they get. They can really start to filter in and say, okay, I need, X, Y, and Z in my home. So that's one of the pieces that I really love.
I hope Andrew watches us now, as I literally reached out to him yesterday, and maybe he's seeing us on Facebook. So regards to Andrew, and here we have some praises for your product.
Yeah, I mean, he's a super smart guy, and he's put his talents behind, listening to the industry and the market, and to try to figure out a way to be able to solve that problem. So, it's something that I subscribed to about a year ago, but really, really have started using a lot more over the last, about 7 months or so. So
yeah.
big fan of that.
Just to elaborate, it's a
Sure.
way to send information about the listing to your buyers.
Yes, it's a way for them to be able to view the homes that are coming out, that are either on the MLS or coming into the MLS. But then also, kind of that transparent tool to allow them to search as well. Because, for me, a big piece of it is collaboration with my clients, right? So that transparency. I want them to see what I'm working on, and I want to see what they're working on. And so, through that, we're able to work together and essentially meet in the middle of finding that perfect home and getting the deal done. So them being able to search and say, I like this property and favored it, and even, be able to, talk to me and say, this is what I like about the home, this information that I need you to get is super powerful. At the same time, they're not just relying on me to send them homes, they're able to search themselves, which is something that I really like. I started actually using Propy over the last couple months. It's been a very cool tool for me to be able to use. It allows me to be able to plug my consumers in so they could see kind of what the flow is, how everything's going. Also integrate with, the different people on my team to be able to do this. So I think that's something that also helps increase transparency. So a little plug for your product.
Thank you. I appreciate that.
You're welcome. And then from there, it's not always feeling like I need to be belly to belly with somebody, right? Zoom is something that frankly some people have burnt out on, but yet you give me a choice to meet with somebody over Zoom for 20 minutes to talk about a deal versus FaceTime or something like that. I'd much rather be on Zoom. And I sure as hell don't want to get in the car and drive 40 minutes in Bay Area traffic, because there's still traffic crazy enough to meet with you for 20 minutes and drive 40 minutes home. Just not efficient for myself, not efficient for the person that I'm getting ready to meet with either. So, ways to be able to, just kind of cut through that transaction are super big. But, still what's left for our industry is this. There's a lot of disruptors and say, look, I want somebody to press a button to be able to buy a home almost sight unseen with an offer. And, that's going to solve it. Or we're going to use technology and bots to have all these conversations to replace the agent. And, I'll say, I think they're foolish. They're foolish because it's not how much VC capital you could raise and how much money you have, but how you can put that money to work to be able to fix an issue. And, the reality of it is real estate is, again, it's far behind in the use of technology, but it's about empowering the agent through technology, not about replacing the agent through technology. And so what I'm waiting for is I'm waiting for the company to be able to, replace, having to sit together with a notary. I mean, how painful is that? The title and escrow replications of all these different people in the transaction that frankly don't provide a high level of service. They're essentially people who serve in an administrative fashion. Those duties can absolutely be replaced by technology, and allowing an agent to do what they do best, which is identify and help mitigate the risk and the pressure and the stress as you go through the process of identifying a home, making sure it's the right home for you, and then closing escrow. So for me, that's the $1 million tool that's still being developed in somebody's garage somewhere, or in a tech lab. And that's what I'm most excited to see, because I don't feel like I will ever be replaced by technology. I'll be replaced by a better agent one day, that's for sure. But technology won't replace what we do as agents. It will only make us more efficient. So instead of agents, pushing back and saying, no, 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 I want to, do this belly to belly, or do it the old school way and try to create, the ways that we did things in 2018, 19 into, 2020 going forward, I think it's foolish. They say it takes anywhere from 21 days to maybe 120 days, depending on who says it, to create a new habit. Well, we've been shelter in place going on that 120 days, right? So, these new habits have been created. And so it's up to us to, really create the new industry of tomorrow, and the way to be able to work with, consumers and different vendors, as opposed to, trying to revert back to what we've always done.
Totally agree with you, Nick. Absolutely. We also believe that the realtor will not be disrupted or displaced, but rather the tech-driven, tech-knowledgeable realtors will remain in the industry. And of course, with growing millennial, new generation realtors, they will just own this space because they grew up with technology. So it's really a matter of being patient, testing the product, trying them out, not being afraid to try. And also, besides those tools that you have mentioned, obviously use Propy to close a transaction and be collaborative with the consumer and your TC. Besides that, as Nick mentioned, Real Scout is the tool to use. And which one did you use? The third one?
Also a big believer in Matterport, which is the 3D technology tours. Yeah. There's a couple companies that have sprung up that have tried to do it. But the whole thing is, Matterport's reached the scale and they've got that first mover advantage still. So as other people are starting to introduce, different ways of doing it, they're just, they're taking a step back and they're speeding right past them. So they just introduced the ability to be able to do it with my iPhone. Not quite the experience as using, the almost $4,000 camera, but one of the things that I'm excited about is when I use it for buyer showings. I'm still trying to get in and preview some homes, and instead of having to drag my clients through the home, or bring my $4,000 camera that takes about an hour and a half to shoot the property, I could go through with my phone, do a 3D tour through Matterport, and be able to send that off to the clients and let them experience the home versus them having to walk through it themselves. So, I'm a Gen Xer. I'm a very young Gen Xer, not quite a millennial. So for me, I've learned to learn from the people that are doing new and cool and sometimes crazy stuff, because, what's crazy today is going to be the norm for tomorrow. So you got to be open-minded. You don't have to be young to introduce and use technology in your business, but you do have to be open-minded.
Yeah, absolutely. Totally agree. Besides those tools on sourcing the customers, closing the deals, I also recommend both those agents that are on Zoom webinar right now and Facebook friends that are maybe considering to buy a home. Pay attention to those new mortgage tech startups, such as whenever you want to get a mortgage, check out better.com, LoanSnap. These are new mortgage providers that will allow you to apply for a mortgage entirely online in a transparent way, to get responses very quickly, to shorten the period of approval, as well as there are a number of startups that are allowing to participate on the market and make offers like you are a cash buyer. And so these are Ribbon, then Divi Home is a startup that allows you to rent out a house, but at the same time to collect, to save money on down payment. So it's almost like you're owning the house. And it's important for the agents to follow those new mortgage techs so that you can expand your clientele, because you can, when you know this information, you can always recommend these new tech startups to your customers and basically win them with this technology awareness. Okay, so we will wrap up soon. After we say goodbye and make final words from you, Nick, we will actually switch into the mode of panelists here on Zoom, and we'll have a Q&A questions. We are encouraging every one of you guys here to switch on your camera and your audio so that you can share what's going on your market. What are your thoughts about our conversation? I'm seeing the first question here on the chat, so we will be answering them shortly. So last words, wrapping up words from you, Nick. Then we will switch off the live stream and we'll stay here on the Zoom environment to the Q&A session.
So just thank you for giving me the ability to talk a little bit about what's going on throughout the Bay Area, and then what I see us being able to do going forward as an industry. You know, a lot of people are trying to create what once was. I've talked to a lot of brokerage owners and leaders, and they say, you know, if it could just be like this, you know, back when. And you know, the world's changing, whether you want to change with it or not, it's really your choice. And so what I'm most excited about is, you know, a lot of brokerages now have been forced and, you know, really thrust into change. And so they're uncomfortable, and that's what brings, you know, the most opportunity. So for me, I'm very hopeful. I'm very excited about being able to, you know, change the way that we interact with people. But still at the same time, you know, keeping the core tenet in place of, you know, the relationship that we have with our buyers and sellers. And so I'm excited that it's not going to be just a couple companies that are leading with technology. Almost every company is going to be thrust into it. And we're definitely going to see a change in the guard, which is something that, you know, quite frankly, I think has been needed for a long time. You know, the danger report that was put out by Stefan Swampo and his team essentially alluded to, you know, we have an aging demographic of brokerage leaders, and they have all this information that they've, in the most part, have not shared to the people who are going to take over for them. And so I see them kind of saying, oh, light bulb, it's time for us to start sharing, and, you know, empowering people like myself to be able to learn from them, but then also being willing and open to, you know, take insights from us to help develop, you know, not, you know, the future in, you know, 5-10 years, but the future in next week and next month. So thank you very much for the opportunity to talk a little bit. I definitely appreciate it.
Thank you, Nick, so much. Okay, we're switching off the live streaming, and we'll be turning the panelist mode for everyone here. So stay tuned